Hi everyone, I'm Oliver Fellows from TerraPay and I'm here to launch our card-to-account solution. TerraPay is a global payments network making cross-border payments, processing in excess of $1 billion per month. We're backed by investors including Prime Ventures, Partech Africa, the World Bank and Visa. With card-to-account, buyers are able to pay suppliers that don't accept card using a virtual card technology where we take funds from the virtual card and deliver payment direct to the supplier's bank account instantly. Virtual cards are growing within travel but are still underutilized. If you look at the overall B2B payments opportunity, there's a massive $65 trillion of volume. Less than 2% of that is currently on card today. When you look at travel intermediary spend, we're back to pre-pandemic levels. But by 2025, we'll see $245 billion of volume on virtual cards. That will still only be 15% of global travel intermediary spend. And then if you look beyond travel intermediaries to the B2B payments that happen for travel as a whole, there's a significant opportunity to improve. B2B travel buyers like cards. That's just a fact. You've seen the stats. But whether it's for enhanced data, improved reconciliation, transaction level controls, or everyone's favorite rebates, B2B travel buyers have embraced virtual cards with open arms. Every single virtual card issuer is trying to replicate the success that's been seen on virtual cards within travel, within other industry verticals. Despite that, there's still an opportunity to plug an acceptance gap. Opportunities for increased card use include helping suppliers that don't want to change the way they receive payments today and they just want to continue to receive payment to a bank account on a receipt of an invoice, paying suppliers that don't want to use an acquiring bank, paying other types of suppliers beyond hotels and airlines. So for instance, a hotel paying an overseas supplier of furniture, and paying smaller properties that may be dominated by mobile wallets. So for instance, we've recognized travel customers that want to make payment to B&Bs in APAC that don't currently find it easy to receive payments to a bank account but do have access to mobile wallets. And finally, there's an opportunity to alter the card economics so that the share of the benefit between buyers and suppliers is fairer. Buyers like card, but suppliers like bank transfer. So with card-to-account, TerraPay can take funds from any virtual card and deliver those funds direct to the supplier's bank account instantly through the TerraPay network. In terms of benefits of card-to-account, for travel buyers, the overarching benefit is that they are able to further utilize the virtual card that they've seen so much potential in and have signed up for. That gives them access to the credit lines that are often associated with these cards, so it gives them a benefit potentially for working capital improvements. There's also the opportunity to generate more rebates from those issuers of those cards. We also see increasingly buyers taking the opportunity to take those credit lines and treat suppliers more fairly by paying them sooner. And finally, card-to-account simplifies supplier onboarding. From a supplier perspective, there's an opportunity to get paid sooner. There's no process burden for accepting a card because the payment's delivered direct to the bank account they're already receiving payments to. There's a low cost of change because the supplier only needs to renegotiate their payment terms with the buyer, which should be favorable terms. And finally, there's no compliance burden, which is often the big blocker to merchants and suppliers that think about moving into accepting card payment. That's the travel sector catered for, but I have to break it to you, there are also financial services people in this room. So from an issuer perspective, the opportunity is to increase interchange and FX revenues by driving more volume through their virtual card business. There's also the opportunity to outsource the acceptance challenge to TerraPay, which is the biggest blocker to any virtual card program's growth. And finally, there's a big opportunity for issuers to increase stickiness with travel buyers by telling them that they can take care of all of their B2B payments rather than just focusing on a small subset that's relevant for virtual card today. From an acquirer perspective, card-to-account simplifies the settlement process, but there's also the big opportunity for them to infiltrate a market beyond consumer e-commerce, which is massively saturated, and B2B presents a huge opportunity. It should be appealing to them because these are also very low-risk flows. In terms of why TerraPay, unlike some of our competitors, we can make this work on a cross-border basis rather than just domestically. So because we own our own cross-border network, we can deliver payment to bank accounts on a cross-border basis and mobile wallets. Because we own those rails, we can also drive down the cost of acceptance and do this without charging an additional card-to-account fee like some of our competitors do. We have an internal team that's willing to engage with suppliers on the supplier onboarding process and help them renegotiate those terms of payment. Our customers can take the full end-to-end solution from us or any one of its constituent parts. We can also deliver uniquely to mobile wallets. So I mentioned the B2B opportunity within China, for instance, which we've seen a lot of use cases for within travel. And finally, we offer a working capital benefit because we can pay out directly to the bank account as soon as the virtual card is successfully authorized. We don't even need to wait for the funds to clear through the card networks. We can deliver payment through card to account to 124 countries, 71 currencies in under a minute. Thank you.
Thank you, Oliver. Audience, what do you think of TerraPay's implementation of virtual cards and card to account? Show of thumbs, please.
Some sideways, some reds, mostly greens though. What do we think, focus group? About half and half. Who wants to jump in first? Chris?
So it's interesting. I've been seeing a lot of payments, early stage startup companies, and almost all of them actually use virtual card as an example of what they're trying to disrupt. As it's too expensive, it's too kludgy, it's not effective, and there's so how do you build sort of an innovative company on old rails when you know that the startup world is coming for you?
So I would say we're also trying to disrupt virtual cards in that we are using the power of our global payments network to solve the problem of trying to push virtual cards at a broader set of B2B payments. With our rails, we can make sure that as much volume goes through virtual cards as possible, which travel buyers are incentivized to do so, and obviously virtual card
But suppliers don't like it. Suppliers don't want to pay interchange on money they're already due. And won't a world of sort of digital movement of money make it much more efficient? Are there other ways to do this that don't involve interchange, which in this case is a false risk?
Yeah, so that's what we're doing with the rest of our network. So we push whatever payments are deemed relevant for virtual cards. So credit lines do play a big role, and as I said, they're a big opportunity for buyers to kind of act in a more responsible way and use those credit lines to pay suppliers sooner. And we've seen a lot of applications like that within other verticals like insurance and shipping and logistics. And travel, because they've seen such fast card acceptance, perhaps haven't been as kind of far ahead doing that. But taking that opportunity to use the credit lines that come with the virtual card, sharing the value with the supplier, and then through the TerraPay network, we can also execute payments direct to the bank account and mobile wallet without the need for virtual card on the rest of the payments.
Thank you.
Anyone else?
I'll go. So I'll ask almost the opposite side of the question. I also feel like in the last few years, there's been a lot of competition in this space. So what is your moat? Is it the quality of your technology? Is it the install base you already have? And how do you intend to preserve that going forward?
So our moat is our network. So we have local connections to bank accounts and mobile wallets in 124 countries. That's taken 7 years to establish, and it's a network that some of the biggest banks and cross-border payments companies use to send money cross-border through us. So when we're applying that to the virtual card use case, all of our competitors currently serve this on a domestic basis. We're taking it cross-border.
Great. Thank you very much, Oliver. Mike?